Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update and catching up with Jayant Bhandari. Jayant is a private investor in the resource stocks that talks to a lot of high net worth investors, and he also puts on the event Capitalism and Morality, the conference in Vancouver this year in August, and we'll put a link to that down below so if those that are interested can attend. I attended the event last year and got a lot out of it, a lot of interesting speeches and a lot of different takes on everything from geopolitics to currencies to commodities to just quality of life and humanity. So interesting event. And Giant, it's always great getting you on the show just to get your thoughts on what has your attention. You're currently visiting China and you're always traveling every time I talk to you to different countries. So you get to see a lot of the world and get an unfiltered take on it without the media biases coming into it. And so I'm curious, with all of the back and forth news that we've all seen the last couple of weeks between the United States and China as it relates to tariffs and reciprocal tariffs and which commodities are going to have export bans on them and the gyration that's caused in the resource space. What are the main takeaways you have as far as US China relations, the trade there, the tariffs, and what is the economic health of China right now?
Thanks for having me, Shad. I have spent a fair bit of my time this year in China. I'm currently traveling in China again, and I have been to companies and I have met people. And I keep coming to China because my clients are interested in understanding China. Now, I am continuously impressed with this country. I think this country is doing an extraordinarily good job. Now, I fully understand the whole CCP thing and the perception that people have about China. But in many ways, China is a very free country. China feels like America to me in many ways. The highways are wonderful. You can drive from one part of the country to another part of the country. The tunnels are great. A lot of things seem to work very well, and people take pride in their work. So that's my understanding of China. I continue to like this country. I think it will do well with or without the US. Now, US has to do what it has to do. US wants to bring back some manufacturing to the US, and I fully understand that. That should never have left the US in the first place. So I am with Trump when it comes to trying to bring some manufacturing back to the US. But at the same time, people in China are honorable people. They are doing what is good for them. And I think this country will continue to progress. I just hope that the two countries find a way to work together rather than work against each other.
Yeah, I have the same wish. I think people get more done working together than working against each other. But the other thing with China is it's so important to the commodity sector, Giant. They are really the manufacturing hub for the world, for better or for worse. And even though the US wants to bring more manufacturing back to onshoring or at least nearshoring in Mexico, China still has a lot of the processing and manufacturing capabilities that the rest of the world does not. At one point, we had all these stories, maybe a decade ago, about ghost cities and trains to nowhere. But I know they've continued to fill in the map as far as more and more of those cities being built out. When you're there on the ground, do you get a sense that it's still growing at a pretty good clip, or have things leveled off some?
Well, so you see ghost cities all over China. This is the truth. They overbuilt apartment buildings, and something has to happen to that. It will take them maybe 5 or 10 years to chew through the excessive apartment buildings they have built. And unfortunately, while people don't live and occupy those apartment buildings, they tend to degrade faster than if the people lived in those buildings. So unfortunately, residential construction is certainly a problem. That industry is probably gone for now. I don't really see much construction happening. I just see empty lots and a lot of empty constructed buildings. So this is certainly an issue, and I don't really fully understand where all those workers went. But China is very flexible in terms of how they employ people. And that is also the case in Hong Kong and Singapore. What happens, Shad, is that when economic crisis hits these countries, they actually reduce salaries of their employees. Now, this is not something you hear much about in North America, but salaries are very flexible in this country, which helps them accommodate to the changing economic climate. So I think people have gone elsewhere. There is certainly a problem of unemployment in this country, but so is that a problem elsewhere in the world. I don't see anything especially negative about China. Chinese are certainly paranoid. When I talk with young Chinese, they do sound paranoid. They are afraid of their relationship with the United States. But at the same time, Shad, all smart people tend to be paranoid. They all tend to be neurotic in a way because they are always worried about tomorrow. They are always worried about their families. They are always worried about their children. So I can understand their paranoia. Also, Shad, I find people here very free minded. Now, unlike in the United States, they don't speak freely in public. But when you are face to face with them, they are very free minded, they are very open minded, they accept criticism of China. But certainly in public space, you cannot talk about it. You probably get into trouble. And in a public space, people will not criticize their government.
Yeah, and rightly so. There's been instances in the past where that hasn't turned out well, but I think that people everywhere really, when you get them privately, they like to speak freely, and you learn a lot in those kind of interactions. Now, you talked a lot about people being paranoid, but it being a healthy paranoia. I think we could transition that over to investors, Giant. There's a lot of investors that are always paranoid, and rightly so, because they're also looking at the future. When you put on your future outlook hat, what do you see as far as the commodity space? Any commodities that, I mean, we know that gold's doing well, but are there any other commodities that have your attention right now as being a good opportunity?
Well, certainly gold is a great metal to own today just because there will be a lot of volatility in the market. Trump has his mood swings, I would say. I mean, I'm very pro Trump. I like Trump. But someone who says that all the leaders of the world are coming to kiss my ass is just a weird kind of a statement, something that I don't think attracts honorable people to Trump. But at the same time, I think Trump is doing the right thing by trying to bring some manufacturing back. There will be a lot of volatility in the market as maybe a fraction of manufacturing does move back to the US, and as US keeps its tariff policy very moody, very unpredictable. And tariff policies actually create a huge amount of problem with global trade. Now, I'm not against Trump in any way or form when it comes to tariffs. I just think that it will create a lot of volatility. So people should be aware of their margin accounts. But overall, I think economic growth in China will continue, which means that commodity consumption should, in my view, continue to increase. Now, that does not necessarily mean that mining companies will necessarily do well because somehow we manage to produce more than what demand increases by.
Well, I guess to that point, one of the metals that was on my mind when I was asking the question was copper. And when you think about copper, we hear all the time that it's in a supply deficit, that not only the US wants it, but that China wants it, that many nations wants it for the build out of infrastructure, electricity, electric vehicle charging stations, AI data centers. We hear it all the time. But when you look at what just happened a couple weeks back, copper made a new all-time high. It was up around 528 to 530, and then it quickly dropped to near $4 a pound, and it's rebounded some since, and I think it's around 440 at the time of this recording. But a lot of people look at copper as the health of the economic world, a forecaster of economic health and growth. What do you do with something like copper with the outlook you have from both domestically in North America, but also being in China?
Well, very difficult for me to have a view on that, Shad, because I see electric vehicles all over China. Electric vehicles have taken China by storm. The quality of those vehicles is extraordinarily good. Let me put it this way, the worst Uber I have had in China is likely better than the best Uber I have had in Vancouver. So that's how good electric vehicles have become in China. And I ask those drivers all the time about the quality of their cars. And almost invariably, they tell me that the car quality is very good. So, China, that has improved a lot. At the same time, Shad, for me to go from one part of the city to another might cost me a couple of dollars, two, three, four, $5 for a trip. So traveling by Uber, which is Didi in China, is very cheap. So somehow when these things become efficient, maybe the requirement to have cars fall for people because they are just happy using Uber in China, which is actually it's not Uber, it's Didi in China. So I'm not sure how it will work out, but also because they have had electric vehicles for a while, the copper coming from old vehicles start coming to the market. So you have to be aware of the fact that you need less copper when efficiencies increase. And when people use the same car, more and more people use the same car through Uber kind of application, then you don't need all those many cars.
Yeah, that's a good point. And a lot of people have talked about the impact and the future outlook for ride sharing versus ownership of vehicles. And also, as the efficiencies improve, maybe you need less and less copper. Just curious to get your thoughts on it. But let's pivot over to gold and the gold equities in particular, because I know that's something that we spend a lot of time talking about off mic. And it's something I think people listening in would be glad to get your update on. One of the companies that you mentioned off mic that has your attention is Integra Resources. We've talked about that a lot on the KE report because they have an interesting development project at Delamar in Idaho and also their Nevada North project, obviously in Nevada. But they have a producing mine now, Florida Canyon. And we had talked last time, Giant, about the arbitrage trade with Florida Canyon to Integra. Now you're looking at the warrant. So give us an update on these Integra warrants.
So, Shad, we started talking about Florida Canyon, and I think you took an interest in buying Florida Canyon when we talked about the arbitrage between Florida Canyon and Integra. Now, that worked out very well, but also Integra went up quite a bit after that. So, that was a great trade. I continue to think that Integra is not expensive, and I continue to accumulate it. But now I'm focusing on buying Integra warrants. They are very illiquid. And I have currently a 77 buy order for Integra warrants. I think it's well priced. And these warrants get exercised 2 or 3 years from now at $1.20. So the way to calculate the pricing of Integra, in my view, is to deduct $1 from the price of Integra. So if Integra is trading at $1.77, I'm happy to place an order for Integra warrants at 77 cents and see what happens. Now, it did get filled for me a few days back because there's not much liquidity. Liquidity and lack of liquidity can be your friend or your enemy depending on what your mindset is. When I'm patiently waiting in the market, lack of liquidity is usually my friend, and I will just sit on it, hoping someone desperate who wants to sell a big block will sell his block to me.
Yeah, I think that's a good point. Sometimes the lack of liquidity creates these weird arbitrage situations in the first place and big bid ask spreads. And so sometimes if you have a nice limit order placed in there and you're patiently waiting, it gets filled because somebody wants out. So it's a great point. Just one more follow up on Integra because they are now a gold producer at Florida Canyon, and yes, that was a great piece of advice you gave out to all of us listeners at the KE report last time. And I did take you up on it and got back into Florida Canyon and did well converting over to Integra, and Integra's had a nice rip. But they're now a producer, and so with the margins increasing, a lot of those projected mine plans were based on gold in the mid 2000s. Now the gold's over 3,000. Do you like them as a producer, or do you like Integra because of the strength of their development projects at Delamar and Nevada North?
Well, the production facility is what gives me the confidence to buy Integra. A market is not very keen on development and early stage projects. So I'm very keen on understanding the valuation of mining. And I think Integra gets a huge amount of value from the mine. It should be producing a massive amount of cash flow right now, given where the gold price is. So that pretty much underpins my value, my view on Integra. Now, the two development projects are great, and it is great that they should be able to finance the work on those projects from the profit of the mine. Those two projects consume a lot of cash. If I recall it right, they consume about $15 million a year. And that's a lot of cash. So the fact that they don't have to keep coming back to the market is a great confidence building approach of the company. So I'm very happy at the current share price.
Yeah, and I think it's a nice business model to have the producing mine organically fund the exploration, development, de-risking, permitting, all of the studies that need to go on at the other projects. And there's a couple companies that have that model now. It's definitely being rewarded by the marketplace. You mentioned developers not really getting a big bid, but I know there's a developer that we talked about last time. Maybe you have an update on it, and that was Next Gold Mining, traded on the TSXV under the ticker NEXG. And this was where Next Gold, which was previously Treasury Metals and merged with Black Wolf Copper and Gold, merged with Signal Gold, which was previously Anaconda. So a lot of these assets were brought together under one roof. You got 6 million ounces of gold here, two big projects between the Goliath Goldland complex and the Goldboro project, each with about 3 million ounces of gold. They've massed up in size here. I haven't seen a huge reaction in the marketplace from this, but what do you think of this business model that Next Gold Mining has?
Well, I quite like the fact that they have merged all these companies. I also quite like Kevin, who is the CEO of the company. Although I haven't talked with him for a year or so now, and I should do that, they have raised money, in my view, a bit unpredictably. I thought they did not need money, and suddenly they came back to the market to raise money at 72 cents, and they priced the warrant very cheaply. That said, it is currently trading at 65 cents. So there is about 10 or 12% differential between the current share price and what was the financing price. It was a bought deal. So I'm certainly keen on accumulating at the current share price. And I just think that the company has to bring more confidence among the investors that they won't keep raising money at low prices.
Well, and just in speaking with their management team a couple of times, and we've had them on the show, it seems like they basically are agnostic to which asset gets developed first. It's really going to come down to whichever of the two projects gets its permit first. Do you like the idea of them building out one mine to then fund the other mine, or do you hope that they get taken out by a larger company as an exit strategy?
For me as a shareholder, it doesn't really matter whether they get sold out to a larger company. But my guess is looking at the projects that they have to build their own projects. While they have 6 million ounces, these are separate projects, and a bigger company might not be interested in all these small projects. I think if they followed the Integra model, it might not be a bad thing to do. They could build one project and start financing other projects from the profit of the first project. But this will take a lot of time. This will take years.
Well, it's definitely a company that we'll keep following along with. It's going to be interesting to see how things proceed with Next Gold. Another company that's in the middle of a merger right now, and we have talked about recently on the show, is Fury Gold Mines. They are taking over Quebec Precious Metals. So there's a merger here in process, and you were mentioning that you see the opportunity for an arbitrage trade, at least as it's set up now. We always dub you as the king of arbitrage trade. So, Giant, what are you seeing here between Fury and Quebec Precious Metals?
So QPM, Quebec Precious Metals, is trading at 3.5 cents. You have to patiently sit at that price, but the arbitrage is about 12%, and the merger should close sometime this month. So that's where I come from. There's not much liquidity, so you have to give an order at 3.5 cents and sit on it. If you buy at 4 cents, you destroy the arbitrage for yourself. So there's no way out but to buy at 3.5 cents.
Now, would your game plan be to sell once it merges with Fury then after the fact? Or are you interested in buying a position in Fury by way of QPM?
Well, I have certainly built a position on QPM, and I will start paying attention to Fury towards the end of the month. But for now, my focus is on the arbitrage opportunity. Now, I have vaguely known about Fury. I actually used to be a large shareholder of Fury at one point of time in the past, but I have not followed up on the projects for the last 3, 4 years. So I will start looking at them towards the end of the month. But for now, it's arbitrage for me.
Okay, just capturing that spread that's on the table there. Well, another company you brought up off mic that's an interesting company to review, Group 11, then it's base metals in Ireland, but give us your take on the value proposition that you see in Group 11.
So again, Shad, I own quite a bit of Group 11. I participated in the recent financing at 19 cents. I quite like the CEO Bart. He has been working on this project for the last 10, 15 years now. In my view, I would not be surprised if this becomes a 30 to 50 million ton base metals project. And they have a neighbor, Glencore, which has a similar kind of deposit just across the border. So this area has, in my view, something like 100 million tons or something between 70 to 100 million tons of rock, and Group 11 has hit some very good holes here, which might be better holes than what Glencore drilled on their side of the property. So that gives me a lot of confidence that this is going to be a mine in the future, and very likely a mine that will be a merger between the Glencore's project and Group 11's project. Group 11 is well cashed up and they are currently drilling, I think, with 2 or 3 rigs at the moment.
And do you like that model where there's a larger operator that maybe has a junior next door? The junior can tell that the mineralized trend continues onto their property. And do you look at those kind of opportunities to say, hey, eventually these two projects need to become one?
Well, it certainly gives me a confidence in this case that even if Group 11 did not find much more rock, because they have about 10 million tons already, which by itself would not be a mine, but just because it's right next to Glencore's project, this will get used up. So it has value as a mine. But then they are drilling higher grades next door as well, just south of Glencore's project. So yes, it just gives me the confidence that this is not going to zero, but also that there's a consolidated project coming in the future.
Well, and one more company maybe we can squeeze in really quick is a company I know that you follow and have a position in, and it's one we have on the show quite often, and that is Aztec Minerals, traded on the ticker AZT. We have Simon on quite often for updates on the exploration. There's two projects the company has, Cervantes and Tombstone. I'm curious, which one of those two do you think is getting more traction with investors at present?
Well, I'm certainly paying more attention to Tombstone because it's in Arizona in the US. I think they have done a very good job at that project. They now intend to drill deeper targets at the project, which gives me a huge blue sky potential at the project. Mexico is something that I have become a bit scared of just because of the changing policies of the Mexican government. But even if the Mexican project stalls for now, in my view, I get enough value from Tombstone to justify the market cap of Aztec, which is about 15 cents today.
Well, just a quick follow up on that. We've heard a lot of people come on and say that they're more bullish on projects based in the US because of, if we put all the tariff stuff to the side, there's also been executive orders from the Trump administration trying to encourage the development of mineral projects. There's been messaging about removing some of the red tape and improving the timelines to permitting. Do you think that puts a bullseye on some of these US projects as a priority for investors to consider?
Absolutely. And I think the same is the case with Integra and certainly is the case with Tombstone of Aztec Minerals. So I'm very happy that the company is focusing most of its efforts on Tombstone for now. And I completely agree. Maybe the whole permitting situation will move faster over the next 2, 3 years.
One final question that just came to my mind while we were talking about the US and the focus on it, and the fact that you're also in China is there's been a big mad rush into companies domestically in North America, both in US and in Canada, that have maybe some exposure to some of the critical minerals that China has put export bans on or limited quotas on, things like antimony, tungsten, germanium. There's been a mad rush into some of these niche kind of specialty metals and critical minerals. Do you have any interest in that or any insights on that, as far as the dynamics between North America and China and these companies that are exploring for some of these more niche metals?
Well, yes and no, Shad. I think commodities are called commodities because they find their way around restrictions. They are like water. You build a dam, and water flows elsewhere. So the same thing happens with any export restrictions. You put export restrictions, those commodities will go to country X, and then from country X, they will go to the US. You saw the same thing with oil pricing after the Russia-Ukraine war started. Oil price shot up and then very quickly came back to normal because oil started finding its way through other countries, particularly India. Nickel, copper started going to other countries, getting remelted and repackaged as their own production and getting shipped around the world again. So I think commodities find their way around the world. And I think that will very likely happen with tungsten and antimony. Now, rare earths might be a different story because the quantities of those commodities might not be enough to hide behind this, might not be enough to move them around. But antimony and tungsten would very likely get repackaged.
Yeah, it's a good point that a lot of times a third party acts as the intermediary to get around a lot of these restrictions. And we absolutely saw that in oil to the point you made. And we'll see it with some of these other metals as well. As we wrap up, just give us a quick snapshot of what to expect at your conference coming up this summer in August, the Capitalism and Morality event. I was there last year and I thought it was a great event, but tell people listening in why they may want to attend this year.
Well, this is a philosophy seminar I run every year. Rick Rule is one of the speakers. He has come for the last 10 years or so. Doug Casey has mostly attended, but he has not been too keen on traveling for the last few years. Amy Wax, Jeff Deist, who was the president of Mises Institute, is speaking. So there are about 10 or 15 speakers at the seminar. It's a one and a half day seminar.
Well, I will put a link to it down below in the show notes for people listening in. If they want to make the trek to Vancouver, I recommend it. Jayant does a great job as the host and MC of the event, and there's always an interesting lineup of speakers and topics discussed. Well, I think we covered a lot here today, from U.S.-China relations to the economics and the growth that you see in China, as well as a look at gold and a lot of these gold stocks. So appreciate you coming on the KE Report, giving us your take on things, Jayant. And if people want to visit his website, I will put a link to Jayant's website down below as well. And definitely recommend following along with his analysis and some of the companies on his radar. And Jayant, as always, looking forward to our next conversation.
Great. Thanks very much for the opportunity.